Hello, traders. I hope all of you are doing well. Welcome back to Your Nifty Guy. Before we dive into the charts, I want to take a moment to talk about something that keeps coming up in trading, the importance of preparation. Markets move fast, emotions run high, but it's the plan you make beforehand that really decides whether you are trading with confidence or just reacting to the noise. In today's video, I'll walk you through my analysis for tomorrow's session, highlight the key zones I'll be watching, and share exactly how I am preparing my trade plan. If you find these daily videos helpful and if they add value to your trading, make sure to like the video, subscribe to the channel if you haven't already, and put down anything that you might have to say in the comments box. And on that note, we'll start with the video. And tomorrow is the monthly expiry of Nifty. So, a word of caution, a disclaimer which I always give to you guys. If you are into option buying and are trading tomorrow, you get any trade as per your setup, make sure to shift your trading to the next week's options instead of tomorrow's expiry. Apart from the one trade that we take, which is the expiry special setup, that is post 2 p.m. Before that, in case if you are taking any long, short, whatever trade, make sure to shift your trading to the next week's expiry. You might be paying a slightly higher premium for your entries, but then it is in your best interest and it will be safeguarding your capital. Now, it might seem a very minuscule or a small thing, but in the long run, this is something which will be a big game changer in your trading journey. So that being said, I did not trade in the markets today. So I was out the whole night yesterday because here in West Bengal, this is the largest festival right now, Durga Puja, which is going on. So I was out whole night with my family, pandal hopping, jumping from one pandal to another, and came back home early morning and decided to not take a trade and rest it out. Uh, so yeah, no trades today. So that leaves one particular viewer with one less work to do. I hope he gets the message. And on that note, we'll start. So, in case if I would have been trading, I'll still analyze what happened in the markets today. Uh, so, markets opened with a gap up, yeah, around these levels. Immediately came down, went up. Now, I had clearly mentioned that we are not looking for any long entries before we give a closing above the previous day's high, right? So it would not make any sense to create any long entry. Although this is a very good setup wherein post the opening, wherein there are you can see some selling which is there if the high gets taken out. But then I would have been this would have been a much more convincing trade had we given a closing below yesterday's low, right? So this is where the liquidity is lying in. And had we given a close, this is the setup which I talk about markets opening flat, slight gap up, slight gap down, and then we give a closing around here. And then if we would have gone up, so that would have been a very good trade and the only long trade that I would have been interested in. So that was the reason again till here around no trade was there. Now try to understand the structure I always keep on talking about, right? From the opening, markets created this low, created this high, this swing, this high, right? Try to understand till around here, till around this point, the market was in a higher high, higher low structure. This high was higher than previous high. This low was higher than previous low. This high was higher than this high. The first structural shift came in around here, wherein markets broke down below this. So the structure was trying to change itself. It could have been sideways price action as well. So we need confirmation. So we got a first lower low. We broke down below this low. We got the first lower low, followed by a lower high as well, right? So this is the structure change. And if you look closely around here, we are near a resistance area, right? In yesterday's video, I had clearly mentioned that if we find any negative price action around this area, we can look at creating a short entry. Now, since, sorry for that. Yeah. So since we were trading near a resistance area and market showed a change in structure, along with if you can simply treat this as a small head and shoulder pattern as well. So this is something which was in the market. So first, and a very good trade would have been around here. I would have traded this without a doubt below this particular low. I would have shorted the markets with the stop loss just being up above this particular swing. Markets moved very, very swiftly in our direction, even breaking down below the day's low. And then this you could have trailed and got an exit as per whatever system that you use. Now, there was some kind of divergences which was again observed today. Now, this was the first about talking about today's trading setup. So this was the only setup which uh, could have been traded. In case if I would have been trading in the markets, I would have taken this particular trade for sure. And then again, post this, no fruitful trade or as per the setup which could have been taken. Markets were kind of in a sideways range, only opened here, closed around here, very, very close to the moved up, moved down, a lot of volatility. But now the important thing to observe around here is the divergence that has been seen on multiple time frames. On a daily time frame, again, the candle is a good follow through candle of the selling which has been there. 4 hours time frame, nothing much to observe. On the 75 minutes time frame, if you observe, markets created new low today around here. RSI created a new high. On 15 minutes time frame, there was continuous divergence. So market created a new low around here. RSI created a new high around here. 5 minutes, like I told you guys, there were divergences which were spotted, and what is the overall consequence of this divergence, whether it is playing out in tomorrow's session is something that we will be observing tomorrow. But then for the time being, we'll be deleting this. We'll keep the trading very, very simple. And my sincere suggestion to everybody would be to reduce your trading till to whatever uh, little trading that you can do. Reduce your quantities, right? For tomorrow, first simple plan will be to create a short entry below this again with a pullback. Now again today, okay, I'll quickly just go back on the charts and the yesterday's low that we had marked below which we were short. So this also signifies the importance of the pullback while we are trading breakouts or breakdowns. So this was yesterday's low, and this was marked on our charts, and we prepared to short the markets below this low with a pullback. Markets gave us a closing below this particular thing. The pullback also came in, but this low was not taken out, right? So anybody who would have blindly shorted the markets just because previous day low was taken out would have been trapped, would have been trapped brutally, right? So this was also a trap which could have been traded, but then again, I am not looking at any long entries till on a daily time frame we get a closing above prior day high, right? So that is the reason. Otherwise, this would have been this was a beautiful trap. Anybody who trades traps, this was a very beautiful where a trap wherein markets went back below and then immediately reversed. So this again signifies the importance of using pullbacks while you are trading breakouts and breakdowns. Now, try to understand we are observing some serious pullback RSI divergence on multiple time frames, including time frames up to 75 minutes, right? If we look at the structure around here, this is a lower high, lower low structure which is still there. But then what if this low is not broken? In case if this low breaks, we are short. That plan is ready with us. In case, I'm just talking about a hypothetical situation, in case if this low is not being broken, and we have the RSI divergences on multiple time frames, and then we go back, right? So this can be a very good reversal trade as per the bottoming out that we see. And that is something that we will wait for the prices to confirm. But then in case if that is happening around here, we can above this particular high, we can create a long entry as well. In between this particular zone, I will avoid any kind of trading and I'll keep my trading to very, very minimum and uh, very controlled for tomorrow. Again, being the monthly expiry, there is a very good chance that the monthly expiry setup that we the not the monthly expiry, but the weekly or the expiry setup that we have for Nifty, that can work out tomorrow. So we'll keep an eye on the open interest and the change in open interest in case if we see any particular call writers or put writers, a huge call or put writing anywhere on any strike prices. And if they are getting trapped and they are exiting their positions, that is where we jump in. And that is the only trade which we will be taking in the September expiry. Otherwise, all rest of the trading, in case if we get any of these trades, we'll be trading it in the next week's expiry, right? Yeah. So I'll keep the trading plan extremely simple, right? If this are the two scenarios which are playing out, but then again, I'll be trading with very strict stop losses and I'll be trailing my positions very, very tightly. The quantities will be very, very less, right? So that's it for today's analysis. Remember, the idea is not to predict every single move, but to stay prepared and react with discipline. If you found this video helpful, don't forget to like, share, and subscribe to Your Nifty Guy for daily market plans. I'll see you in the next video. Until then, trade safe and stay focused. Cheers.